Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. Today's Adam Live episode, crypto IRAs and your private keys. We'll also talk about 401ks and maybe there's a way that you can hold your private keys in a 401k without having to deal with the McNulty case, which is really where I want to start on today's YouTube Live. And I also want to encourage people to ask questions, right? Send me a chat question. I will get to them. If they're involving cryptos, even better. But if they involve other self-directed retirement topics, let's do it. Let's have some fun. This is going to be a fun episode. And I appreciate you guys spending some time with me today. So let's get going. So I'm going to break this podcast up to pre-McNulty and post-McNulty. So before McNulty, there was not a lot of guidance on whether one could hold IRA assets in their personal possession, right? We knew if you looked at Internal Revenue Code Section 408M, it was super clear that you cannot hold IRS-approved bullion, coins, gold, silver, palladium, bullion, any other place other than in the physical possession of a trustee, which is like a depository. It was super clear. And there really wasn't any controversy. If you look at RITA, which is the Retirement Industry Trust Association, where all the leading custodians are members of, we all took the same position that, hey, if you're going to buy if you're going to buy precious metals in your IRA, don't hold it personally. Don't hold it in your house. Hold it at a depository. Sure, they're safe, they're secure, they're not super expensive. That's the law. You got to do it. Okay. There's some question about, hey, can you hold it in a safe deposit box in a bank? And again, there's more of a gray area of that, but technically you still have constructive control over that safe deposit box because you got the key, right? We'll talk about private keys in a minute, but you got the key. If you have the key, you had control over the assets. Well, the provision in 408M says physical possession. It doesn't say ownership or control. It says physical possession. So a lot of people took the position that, hey, you can hold IRA-owned precious metals in a safe deposit box in a bank. And again, my position is why mess around? Just hold it at a depository and basically don't even have any risk of any issues with the IRS. So that was basically the rules that applied to metals. Now, before 2015, 16, no one was really buying cryptos in their IRA. I mean, very, very, very few people did it. Okay, so there's not a lot of IRA assets that you can hold personally, right? You can't hold real estate in your pocket, right? You can just take the real estate and put it in your safe deposit box or in your safe in your house, right? So you can't do that. There's case law that's clear that you can hold stock certificates, private placement paper, promissory note paper that's owned in the name of your IRA, and by you holding it personally, that doesn't trigger a prohibited transaction. That is not deemed as you taking personal possession of the underlying asset. So we had guidance there. So before cryptos, which is a digital asset, there really wasn't any type of IRA asset that you can hold physically other than cash. Well, obviously, cash is pretty simple. You can't put cash in your pocket. Same with like foreign currency, right? If you held foreign currency in your IRA in your house and you got audited, you're probably going to lose. Cryptos comes along, right? 15, 16, 17 to the present. More and more people are getting interested in buying digital assets in their IRA. Well, we didn't have a lot of guidance to go on. So there were two, I would say, schools of thought. The first was, okay, 408M talks about metals, talks about IRAs, and says you can't hold IRS-approved metals in the physical possession of anything other than a depository. And then there was a flip side saying, hey, that only applies to metals. If you have other assets, you can hold it personally, i.e. cryptos. No one really knew. There wasn't specific guidance on cryptos. There still isn't. But there really wasn't a lot of case law in terms of personal possession of an IRA asset because it just doesn't come up a lot, right? Other than metals, you can't really hold an IRA asset personally. McNulty v. Commissioner, a very important tax court case that was released to the public in November of 21. It dates back all the way to 2015, and just give you some basic facts, because I've done videos and blogs and YouTube Live on the McNulty case, so I don't really want to focus too much on it, other than a couple important points. Number one, quick description of the facts. The McNulty set up a self-directed IRA LLC to buy precious metals and real estate. They basically moved their IRA funds to a custodian. The custodian sent the money to an LLC through a bank account they controlled. They bought the metals in the name of the LLC, but they held the coins in their home, okay, which clearly violates 408M. I'm not sure why they did that. I'm furthermore not sure why they decided to fight and contest the IRS's position, because clearly they were going to lose, but they decided to do it anyways. And we have the ruling. And the ruling was pretty clear. Hey, taxpayer, you violated 408M. It's taxable. What the ruling also went on to describe is they made the ruling applicable to a broader set of assets. And they said as follows. They didn't say precious metals. They said an IRA owner cannot take personal possession of an IRA asset, not just coins or metals, but IRA assets. It also said that an IRA owner cannot have unfettered command or control over an IRA asset. Okay, not precious metals, assets. So if you look at McNulty, and our industry has over the last month and a half, and we've really focused, and myself as a tax attorney and a number of other colleagues of mine have really studied this case, and came up with the premise that cryptos, Bitcoin, Ethereum, whatever type of coin or token you're going to buy, you cannot personally possess it. Okay, I've heard people say, Adam, you're wrong. This only applies to checkbook control. The case was about checkbook control. The facts were checkbook control, but the ruling didn't distinguish between self-directed IRA checkbook control and self-directed IRA. In fact, it just said IRA. So I disagree with that. Some argue, well, it's just about precious metals. It's not about IRA assets in the entirety. Disagree with that. If you look at the ruling, it's pretty clear. It's broad and addresses IRA assets in the totality. So where do we stand? Now let's talk about cryptos, right? If you're watching or listening, you probably have some cryptos. You're thinking of buying cryptos in an IRA. Now, IRA Financial has, I think, the best platform out there. I'm obviously biased because I helped design it, but we let our clients use Gemini, which is one of the leading crypto exchanges out there. They have over 30 billion in assets, 70 plus coins they work with. They're a New York State trust. They have money transmitter licenses. They're regulated by New York State. They go through audits, and they have insurance to cover holding your private keys. So you can own it in your IRA. We have flat fees, no transaction fees, no additional commission fees other than what Gemini charges. We don't even have any check or wire fees. So one flat fee of $360 and you're done. Okay. So I'm very proud of our solution, and I do think it's the best out there. There's others out there that lets you buy just cryptos. Ours lets you do cryptos and for the same price, real estate, private placements, any other IRS approved alternative asset investment, which is awesome. Also, we don't charge an asset valuation fee annually. So if you start with 30 grand with us and in 5 years it's worth 600 grand, you're still paying 360. You're not paying any percentage higher, which again is something that's really important to us. So if you are a crypto IRA investor with IRA Financial, you're thinking about it. If you hold your cryptos on an exchange, meaning you buy Bitcoin or Ethereum or Polygon, and you keep the tokens on the Gemini exchange, you don't have to worry about McNulty. Okay. McNulty only addresses if you take personal possession of the crypto. So pretend this is my Ledger Nano. If I hold my IRA cryptos here, now I'm in the McNulty world. But if my cryptos are held on Gemini, you don't have to deal with McNulty. Why? Because the IRA still controls the cryptos. The IRA financial account has custody of that Gemini account, and the cryptos are on the Gemini exchange. You do not have unfettered control over them. meaning you can't just take the cryptos and buy a car, right? You'd have to move it off the exchange to do so. The chain of custody is maintained. IRA Financial is still the custodian of the cryptos on the Gemini exchange. That chain of custody has not been broken. The custodies have not been, the cryptos, have not been moved to you. And for most investors, I would say 90% plus of our crypto IRA investors, the tens of thousands of people that have crypto IRA accounts with us, they hold the cryptos on the exchange. And that means, just so you know, that Gemini technically controls your private key. So for 90% of you, that's cool. And I hold cryptos on Gemini. I also hold them on a cold wallet, which we'll get to in a minute. Now, what's the risk of holding cryptos on exchange? We've all heard about hacks, right? Do you really own the cryptos if you don't control the private key? So what's the private key? So there's a private and a public key when it comes to cryptos, right? Think about your home, your address, 123 Apple Street. That's your public key. Everyone can find you. But only you have the key to 123 Apple Street's house. So you have the private key, because without the key, you can't get in the house. Same with cryptos. Your private key is a derivative of the public key, and this is based off cryptography. So only the private key is meshed with the public key. If the private key is not aligned with the public key, you're not going to be able to transfer the cryptos. So even though you think you own them, if you don't own the private keys or have them, you don't technically own them. And then that's the saying, no keys, no cheese, right? Everyone's heard that. If you haven't, it's pretty catchy, right? No keys, no cheese. So you may have $1 million of Bitcoin on an exchange, but do you really own the Bitcoin because you don't control the private keys? Some will say, yeah, it's on the exchange, or they're regulated, they're insured, they're licensed. You still you own it. They will satisfy the transfer when you request it. Others say, don't be so naive. Move the cryptos off an exchange. So for those, that 10% of IRA Financial clients that want to hold their cryptos off an exchange, how do you do it? So the most popular way is through a cold wallet, right? Like a Ledger Nano, basically a USB code. There are other ways to do it digitally, but I'm just going to stay with the cold wallet model. You basically move the cryptos to a cold wallet, and then you pull the USB off the internet and you hold it somewhere safe. And then there's a password that's associated with that Nano, and then only you who has the password can access it and then link it back to an exchange and then move it back to an exchange or move it to a third party or do whatever you need to do with it. So the idea is that, hey, if you own the cryptos on a Ledger Nano or any other type of cold wallet, you have more security, more safety, and you actually own the private key. So now McNulty. And McNulty, the rule is pretty clear that you cannot have unfettered command, unfettered control, or take personal possession of an IRA asset. What do we do? So we have allowed our clients to move their cryptos off Gemini to a cold wallet. And this is something that we've done for many years. Now that McNulty has been publicized and is now law, in the sense that there's precedent, there's case law on it, we have to adjust, okay? And again, if it was up to me, I've said this repeatedly, of course I want you to have control over your private key, right? Someone asked, why use you guys instead of own the keys ourselves? Well, I want to give you the keys yourself, Patrick, but I also don't want you to get in trouble with the IRS. So we have to be cautious of McNulty. Thankfully, we have a great set of blockchain developers and crypto developers that are working on a lot of cool projects. And we've come up with a multi-signature solution, which we're going to drop and release in the next week or so. We're just doing the testing for Bitcoin and Ethereum related coins, which will allow you to pull the cryptos off the exchange onto a Ledger Nano. Well, you'll have a private key and we'll also have a key. So there's a multi-signature wallet setting where we still maintain our chain of custody. So IRS cannot argue you have unfettered control or unfettered command because we technically have to consent to your transaction. And we're working in a way that you'll also be able to trade DeFi with our consent, meaning if you want to exchange it on like Uniswap or SushiSwap, that will be dealt with. But this way you still can hold it in your pocket or in a safe or have the comfort to know that your cryptos are safe and secure. They're off an exchange. They're protected from a hack. But at the same time, we still need to have some chain of custody. So we're still going to need to have some signature requirement. Now, we can't move the cryptos without you. Why? Because you're going to need dual signature, right? Just like you can't move it without us, we can't move it without you. So you're protected that way. We're not going to obviously withhold consent. It's your cryptos. You're going to be able to do what you want, but at least we can maintain the chain of custody. And that's what's important. I've heard from a lot of colleagues and different people in the industry saying, well, do you really need to go this far, Adam? Cryptos are on a blockchain. We can keep control over it. We'll require the clients to tell us if they move it. Unfortunately, based off McNulty, that's not going to fly. Why? Because the individual still has unfettered control and unfettered command. And they still have personal possession of the asset, irrespective if you can trace them on blockchain, irrespective if you'll close their IRA down if they move the assets without your consent. Doesn't matter. Once they take control over that asset, they got personal possession, McNulty applies and their IRA is blown up. So I don't want to put my clients in that position. And as an attorney, someone that's been practicing tax law for 20 plus years, I have a master's in tax law, I know how rules work. I understand tax court cases, and we have to respect the rules. Okay, there could be future guidance, whether it's through private letter rulings, other IRS publications that give us more guidance in terms of, hey, cryptos are a little different than precious metals because we know people are pulling cryptos off an exchange for security reasons, not just to hold it or to transact with it, but there are legitimate safety and security reasons for holding crypto, especially private keys, personally, because again, no keys, no cheese. And that's legitimate. I mean, it's accurate. If you don't hold a private key, you technically don't own it. The exchange owns it. Now, there is an agreement that when you ask for your cryptos, they will provide them to you, but you can't guarantee that you actually own that crypto, right? It's a insinuated promise that when you ask to move the one Bitcoin or sell it, that the Bitcoin will be there. Whereas if you have it on a private key, assuming my baseball is a private key, I can touch it. I know it's here. All I need is my password, link it to an exchange, bang, I got my Bitcoin, I got my Ethereum tokens. So there is a legitimate claim to having ownership of a private key. We'll see where it goes. I just know we're not going to get any guidance tomorrow, so we need to deal and live with McNulty, and I think the multi-signature wallet is a solution. So I'll get to some of these questions in a minute. Now, let me just talk about 401ks. A 401k is not an IRA. In a 401k, the plan documents control. A 401k is technically governed by the trustee, whereas an IRA, the trustee is technically the custodian. Okay, IRA Financial is technically the trustee of your IRA. So we have reporting responsibilities on the IRA. We'll fill out the 5498 annually, 1099s, etc. The 401k, the trustee, you, for example, is responsible. The bank is just the custodian of the assets, but it doesn't have reporting requirements. You do. So the thought is, and I've seen this in metals too, in the case of a 401k, technically 408M doesn't apply because that only applies to IRAs. So technically, some people have said, well, I can own metals personally. I can hold them as the trustee on behalf of my plan. And there is an argument to be said on that end. The same with cryptos. If you have a solo 401k and own cryptos and have our crypto 401k program through Gemini, technically you can move them off an exchange. McNulty applies to IRAs, doesn't apply to 401ks. It says possession of an IRA asset. It doesn't say possession of a retirement asset. It says unfettered command or control over an IRA, not a 401k. Why? Because again, 401k, you're the trustee. You can hold the assets as the trustee on behalf of the trust or for the benefit of the trust beneficiary. So it's a very different dynamic than a 408 IRA. 401ks are taxed under 401. It's a different section of the code. So for all my thousands of solo 401k clients out there, there is a legitimate claim to say as trustee of the plan, you can hold cryptos in a cold wallet personally for the benefit of your plan. Now, again, you can't use them and buy yourself a car or go out and buy something, a boat or whatever you want to do. But technically, you can hold it for the benefit of your plan. And those rules are different than IRAs and the McNulty case. So just wanted to point that out. There's much broader ground to stand on if you're a 401k trustee to hold the assets of a plan participant, i.e. a solo K, and hold the cryptos in a cold wallet for the benefit of the participant. Now, for IRA Financial Technologies, we have 80 plus employees. I'm not going to be holding people's cryptos. No way. And I'm not going to let them hold it because I think that would violate McNulty. I think I could as the trustee, but I don't want to. So for IRA Financial employees that buy cryptos, they're going to have to keep them, and they do. They have to keep them on Gemini. We're not letting them move them to a private cold wallet. But in an IRA or a solo K, you are in control. And in the case of a solo K, I think there is guidance to suggest that as the trustee, you can do so. So just wanted to distinguish between both. Okay, let me get some questions. Oh, we got a bunch. That's good. Can I invest in nodes with my self-directed IRA with Checkbook LLC? Yeah, technically you can. I mean, if you can, yes. The idea is if the node's operation rises to a trader business, then under Notice 2014-21, you may trigger UBIT, unrelated business income tax, but it all depends if the node's investment rises to a trader or business. Okay, Eric. Adam, thank you for the presentation. You're very welcome. Can we hold in a cold wallet if that wallet is held by a financial institution, regulated bank, or a digital custodian? Yeah, you 100% can. There, you're not going to have unfettered control or command. Just like if you hold the cryptos on Gemini, it's your cryptos, right? The account's in the name of your IRA, Eric, but you don't have possession of it. It's at IRA Financial, it's at Gemini, it's at Schwab, Fidelity, wherever it is. So that's the difference. Whereas, Eric, if you held the cryptos, if this baseball was your wallet and you had them in your pocket, or in your hand, that's the difference, right? Versus, hey, they're on the exchange. I don't have personal possession. I don't have unfettered command because they're at Gemini or they're at Fidelity or they're at IRA Financial, which is different than if they're in Eric's house. Okay, Jacob, any thoughts on the possibility of a smart contract that looks up your crypto for a certain period of time that offers the security of private possession while possibly removing unfettered access? Yeah, it's good point. I mean, I'd love to talk to you about it, Jacob. We've had interesting conversations with various developers, even some clients. I got some freaking brilliant crypto clients. I've had a bunch of contact with them, giving me really good thoughts and ideas on this. So I'm open and I'm welcome in anyone who wants to reach out to me. My address is abergman at IRA Financial, Jose. So Jacob, feel free, abergman at IRA Financial. Shoot me an email. Love to hear your thoughts. The three things we care about is personal possession and the unfettered control or command. So if you can come up with a way, Jacob, where you feel comfortable that you have control over your cryptos and we can show that you don't have personal possession or unfettered command, let's talk. I'm in your camp. I'm a crypto investor. I have been for 6-7 years. I wrote the first book on how to use retirement funds to buy cryptos. It's on Amazon. I published it in 18, started working on it in 16. I actually got to update it. I'm working on the update, but I'm with you guys. Like, I want to give you guys control. I'm not the IRS. I'm not the regulator. Like, I want to work with you. I want to figure out the best way to let you guys take personal possession, have the safety, have the security of owning the cryptos without the IRS headache. So any thoughts, any ideas, hit me up. Love to hear from you. A cold wallet is analogous to physically holding a security title to a piece of real estate. Unfortunately, Richard, I would love to agree with you, but that's not the case because it's not as marketable. And there's case law clearly that suggests that holding a piece of paper title to a house is not analogous to holding the asset. If you have title to a home, you can't go to Tesla and buy a car. Okay? Can't do it. You could with cryptos. That's the difference. Okay? So I wish, Richard, the IRS agreed with you, but unfortunately, I don't think that argument will stand up. But I appreciate it. Like, I wish it did. Okay? I wish we could make the argument, Richard, that all you have is the nano. You don't have the underlying asset, which is akin to having a stock certificate of a private business and not owning the private business. The difference is a digital asset is transferable. It's very marketable. Okay, whereas a piece of paper, if let's say you own 5% of IRA Financial, that's worthless. It's paper. It's going to be worth a lot of money, hopefully one day, but you can't go to Domino's and buy a slice of pizza or buy a boat. They're going to laugh at you. Okay, Jacob, nice. Nice to multi-sig. Yeah, I think the multi-sig is the best we're going to do, unless one of you guys have a better idea. According to our crypto and blockchain developers, it won't be super annoying. There will be a cost because you're going to have to buy a Ledger Nano, which we'll buy for you because it needs to be paid with IRA funds. And there will be a small cost to us having the responsibility of holding the key, just because there's wallet costs and the solution and platform costs money that we're building out. And also we're going to have to staff that department with people that are going to be responsible for making sure they're around when you want consent to move your crypto. So there will be a small fee, unfortunately. Again, I'm in your camp. When McNulty came out, my heart dropped because initially it should have been a very unremarkable case. It was about precious metals, and clearly the taxpayer violated 408M. So it really shouldn't have even gone to tax court. I'm surprised they paid the tax and their lawyers to argue it. But now we got to live with the opinion. And until we get further guidance, this is the law. So we just got to comply. Okay, Jose. So if I understand this correctly, if the crypto is held at an exchange, we don't have the keys to it. So we are good. You are right. You're good. Assuming you're okay with not having the keys, which 90% of my clients are. And for a bunch of my assets, I hold them on Gemini. I have some on Coinbase too. I'm comfortable. I also have a bulk of my holdings on a private wallet. So maybe I'm better diversified. It's up to you. I know clients that have millions of dollars on exchange and sleep well at night. And I have clients that have 20 grand that don't sleep at night because it's on an exchange. So it's your call. It's your investments. It's your cryptos. It's your call. How about if you're staking the crypto in a dApp? So, right, if you're staking, it depends on where it is. If it's at an exchange and you're able to stake it, no problem. If you got to do it through a different medium like a DeFi, and you have personal possession of those cryptos, that's a different story, and that's something we'll have to address. Okay, the next question. What about? Hold on, I lost you. Okay, what about us having a hot wallet like MetaMask? Is that also unfettered control? Technically, yeah. If you can get the cryptos, if you can move them from MetaMask anywhere you want on your own, yeah, technically you have unfettered command. Whereas if the cryptos are in Gemini or if you own stock at Fidelity, you can't just move the stock, right? You need to get the consent to move it. And then there's reporting at the exchange level. Whereas if it's at MetaMask and you can just move it, you probably have unfettered control. But it's not as crystal clear as physical possession of the actual cold wallet, right? Assuming if you can put some barriers on the ability to transfer out of MetaMask, so at least the argument is there that we have continued custody of that asset, even though you have some control. If you just have unfettered control or command, even though you don't have personal possession, I'm somewhat worried. So that's the issue. Okay, Eliza, if there is multi-signature required, is there any lag time for a transaction? Yeah, there's going to be some. I mean, we're working on ways to minimize that, but and we're also working on a DeFi solution where we'll be able to give you this consent for future DeFi transactions. So just stay tuned. We're working on a solution, Eliza, that will condense any lag time, but it's not going to be as quick as you just like clicking a button, unfortunately. I wish, but we got to deal with what we got to deal with. JP, will the solution you're working on cover desktop mobile apps like MetaMask? Yeah, it will. It's just going to be a different solution. Okay, so it's not going to be MetaMask. It's going to be a different platform where you'll have the key. And so we ultimately want to make sure that we're protecting our clients and making sure they're doing things in line with tax court precedents. Tom, after a solo K is converted to a Roth, does the original solo 401k remain after the conversion? Yeah, the plan is there. The plan doesn't go away. You're just setting up a sub account under the plan. Okay, so just think of it as what's a good example? Okay, you take this baseball and one side of it's white. Let's say I color the other side black. It's still part of the baseball. It's just a sub side of the plan. So the plan's still there, same EIN. You're the trustee. It just has a sub bank account under the plan. Have a sub Roth. Tom again. What then does one want to do a backdoor Roth the next calendar tax year? So right now, the Build Back Better bill, as I mentioned, is dormant. So there was a provision in the Build Back Better bill that sought to eliminate the backdoor Roth IRA and the mega backdoor Roth 401k starting in 2022. As I mentioned, the bill's dead. Today it could come back, it could be resurrected. But I've done a backdoor Roth IRA already for 22. I doubt it's going to be retroactive. So our industry lobbyists are telling us that they believe that they don't see the BBB bill getting passed in the next month or so. So they don't believe that it will be retroactive. So even if it passes and the bill and the backdoor Roth and backdoor Roth 401k stay, it's going to probably apply to 23. So you still can, I would say, do it now. If we have to deal with retroactive, we'll deal with it and we'll help you deal with it. But do it if you can. Okay, Eric, thank you. Okay, more questions. Will IRS retrospectively, even if I pull the crypto back? Listen, I don't know what the IRS will do. All we can do is do our best based off the current rules. So what I did is I moved them back because at least I can argue if I ever get audited that, hey, McNulty came out, I did what I was supposed to do, and now they're on a multi-sig wallet. Again, if you get audited down the road, I'm not sure, again, how the IRS will audit cryptos. I've never seen a crypto audit. They'll probably ask where it's held now. I don't know if they'll ask where you held it a year ago or 2 years ago. I don't know how they'll find that out. Yeah, there's some ways through documentation on the exchange, but I'm not sure they'll go there. Again, I don't know. I've never seen a crypto IRA audit. I don't think there's ever been one. I know the IRS has issued John Doe summonses to like Coinbase and Kraken, some of the other major exchanges, but they've been focused on individual taxpayers. They're not focused on IRAs. And if you filed a tax return last year and you actually looked at the 1040 line, I think 7 or 8 asked, do you own any cryptos personally? So this is something they're focused on. They're not focused as of yet on IRAs owning cryptos. So I would just put them back, give us a week or so, we'll have a solution. Do we have to use Gemini Exchange to use a cold wallet with the new dual signature? So no. If you have an LLC or yet use a different exchange, we can still work with you. It's not a problem because we're going to connect through the wallet, not through Gemini. So don't worry about it. Will your solution handle Polygon and other chains? Absolutely. I'm a big Polygon guy. And Polygon's been great, right? If you have Polygon, you're super excited. It's held up super, super well in the last couple months with Bitcoin, Ethereum, tanking. Polygon's, I didn't look today, but it's around 230 or so. So it's really benefited from the NFT swell in popularity. So super happy about that. You have to buy the Ledger IRA funds. I would suggest or have someone do it. It's just cleaner than using personal funds. So we're going to buy them for our clients, or at least send you a gift certificate that you can buy them on Amazon or wherever you want to buy them. But we have a relationship where we're developing one with Ledger where we'll be able to get a discount and send you the wallet. 2 quick questions. Is there an ETA on your multi-sig? Yeah, we're testing it now. So we're testing Bitcoin and Ethereum backed coins. Then we're going to focus on policies, procedures, a couple weeks, maybe quicker. What about investing in DAOs? yeah, again, anything that's crypto based you can do. The question is just how are you going to hold the coins, and is it a business or not? If it's not a business, then you're not going to have to deal with UBIT. Two, this impacts customers using your LLC option as well. Yeah, technically, whether you use an LLC or a custodian-controlled approach with Gemini, the issue is not that. The issue is the personal possession of the wallet with the crypto. So the solution will cover both, I promise. Entered webinar late. IRA Financial owned LLC. LLC purchases crypto and then puts them on a ledger purchased by the LLC. It's still okay. Well, under McNulty, no, because the point is the Nano is owned by the LLC/IRA, but IRA Financial no longer has chain of custody, meaning you have unfettered control or unfettered command and personal possession of the underlying asset, the crypto. So that's the issue we're trying to correct. So at this point, I would move those cryptos from the LLC back to the exchange and then wait till we have our multi-sig, and then we can help you get through it and hold the private key, at least one of the private keys, so you can still maintain some level of safety and security. Would having an NFT that holds the crypto be considered personal and unfettered? Again, I think it's based off the facts and circumstances, Jose. It all depends, right? If you have personal possession of it, yeah, I think you could violate McNulty. If that NFT is held somewhere on an exchange or somewhere else, then probably not. You're probably okay. But when it comes to NFTs, I mean, we could do a whole nother Adam Live about that. Can IRAs buy NFTs, right? Is it a collectible or not? And that obviously is determinative based off the underlying NFT. Art, probably not, but we know there's different functionalities of NFTs that could not be or could be deemed not a collectible. So well, we can discuss that as well, but just consider the collectible rules as well. When is our token drop? Yeah, we're dropping. So we're doing, just as like a sneak peek, I would say next month. We're testing it now. We're doing a token called IRA, which will basically be Ethereum based. We're going to give it to all our clients that open an account, $50 or $200 if you do an IRA, LLC, or solo. And it's going to be Ethereum based. So as Ethereum goes up, that token is going to be worth more. We're also going to par it out. So if it goes down and you want to get out of it, we'll give you back the $50 as well. So we're super excited, or the 200. We're super excited about that. It's a way to encourage people to open accounts, have more money in their retirement account. The key is you're going to have to pay with retirement funds to get the token, because the IRS has this weird rule from 1993 that says if you have under $5,000 that you're rolling over, the biggest bonus a custodian can give you is, I think, $10. And if you're rolling over more than $5,000, you can get a $20 bonus. So the way we've done it as a discount, but we don't want to, deal with the IRS rules. So if you pay with IRS fees, if you pay with IRA funds, we'll give your IRA back the money. But if you pay with personal funds, we'll give you back the money personally. So we'll be able to set up a crypto for you personally in your name. Yeah, it's only $50 or $200, but it's free money that you can have some fun with. You said I can invest in nodes, but I need to use MetaMask and DeFi. Your staff doesn't know how to answer my crypto questions. How can I get guidance on this? Monty, okay. We're happy to help. As I mentioned, you can email me, Bergman at IRA Financial, and I will get you an answer. We have a really good team, but not everyone is super well versed on like DeFi. It's pretty complex. So I'm happy to answer your question. We'll work with you to find a way. Remember the personal possession issue. So you may need to wait, Monty, until we get our multi-sig, because if you're doing DeFi, you're going to need to take personal possession of the crypto, which I don't want to have any issues with. Can I ask that you include a new chain called Pulse that will launch within the next 60 days? It's not up to me, JP. I don't make the rules. It's what the wallets will handle. Generally, all the major Ethereum, Bitcoin tokens, I can ask. I just don't know, honestly. But again, unfortunately, It's a good solution. It's not perfect, right? There's going to be tokens this solution doesn't work with, and I'm sorry. I wish McNulty never happened. I personally wish we all can have personal possession of our cryptos. I think there's a safety and security legitimate claim, unlike precious metals, where depositories are safe. There's no reason you shouldn't hold it at a depository. Also, we have a different history with gold. We were on the gold standard. A lot of the rules for precious metals are based off old gold thinking. Even though ERISA was developed in 74, a lot of gold thinking is based off gold standard stuff where the government wants to have control and keep better track of gold because of the gold standard. Even though we don't use the gold standard anymore, it was an old way of thinking. Digital gold, digital assets are totally not gold. They're not physical. There's less of a concern, although from an IRS standpoint, I understand. Let's step in their shoes for a minute. Let's say you're a regulator. Let's say you work at the IRS, right? And nothing against the IRS. There's some wonderful people. I got some friends that work there, and they're amazing people. And there's some good people there. And their job is to make sure people keep to the rules, right? People aren't violating the rules. And with an IRA, the idea is that, hey, you're saving for the future. We want to make sure that when you hit 72 and you have to take an RMD, you're doing that and you're paying tax. And we want to make sure that your assets are for your retirement. You're not using them today. And if you are using them today, you're paying tax and potentially a penalty. So if you're a regulator, wouldn't you want to have a little bit of control and make sure that it just wasn't so easy to take your IRA cryptos and buy a Rolex watch or a boat or a car or even a hotel room? And we know, Bitcoin is definitely not as easy to use as cash or a Visa or MasterCard, but there's a lot of stuff you can buy with Bitcoin. So I understand. I do understand where they're coming from. I disagree with them, but I understand where they're coming from. And that's why we're trying to find a middle ground where you can have some personal possession, have the safety and security, and not run afoul and get in trouble with the IRS. So there you go. It's like Polygon. It is not Ethereum. Well, if it's like Polygon and it's Ethereum based, it should be good to go. Will the dual signature cold wallet solution allow it to purchase all tokens before they are listed on the exchange? I don't know. Possibly. If it's with PancakeSwap or Uni, then yeah, because we're going to be able to allow you to do DeFi trading. So that should work. But I promise I'm actually going to do I don't know if I'll do YouTube Live, but I'll do a video with one of the blockchain developers where I'm going to get him to answer all these questions. Okay. I'm just a dumb tax lawyer. I've spent years as a crypto investor, but my strength is more on the tax side than the crypto procedural side. So I promise we'll get answers to all your questions. If you have thoughts, ideas, if you think you have a solution that's better than multi-sig, share it. Love to hear from you. The idea is to find a way where you can do what you need to do in a way that doesn't violate McNulty or any IRS rules. So that's my goal. Okay, hey Mark, what's up? I joined late. Hi Adam. It's an IRA with LLC. Do we have to use the dual sig wallet? Yeah, Mark, you're going to need to do the same thing because technically the LLC is owned by the IRA. And if the LLC, because again, remember, if you look at McNulty, the McNulty's had an IRA LLC, right? So same rules. They still took personal possession of the metals in the IRA LLC context. So Mark's a smart guy. I've talked to Mark many times, super smart guy. So thanks for the question, Mark. But yeah, I think the same rules apply. Is there an RMD calculator on the IRA Financial website? Yeah. RMD, no. We're working on it. JP, send an email to info@IRA Financial Trust and we'll calculate it for you. We are working on RMD calculator. We have a solo 401k loan calculator. I don't believe we have an RMD calculator, but we'll do it for you. So if you send an email to info@IRA Financial Trust and just say, hey, I have 80 grand. I'm 78 years old, whatever it is. We'll get you the answer. Don't worry. And we tell all our clients when they're at the RMD age what the RMD is. So don't worry, JP. We're not going to leave you high and dry. I promise. That's it. Almost did an hour. This is great. Love this stuff. I love interacting. Amazing questions. You guys are super, super intelligent, right on. And I just want to end with this. Like, I'm on your side, right? Like, I'm with you guys. Like, if we can find a way where we can all have personal possession, take control, and not run afoul of IRS rules or tax court cases, like, I'm in. I will push the envelope as best as I can. I will argue for you guys. I will defend you guys. But at some point, like, we just need to work in the parameters of, at this point, McNulty. So that's the issue. Yeah, this is recorded. So if you come in late, don't worry. I know you guys are busy. You probably got other important stuff to do during the day. No worries. This is taped. It's on YouTube. You can watch it whenever you want. If you can't sleep at night, put it on. It'll probably put you to sleep. Actually, not this topic. This is a fun one. Probably some of the other ones when I talk about IRA contribution rules and 401k contribution rules. Yeah, that's going to put you to sleep. This stuff's cool. It's cryptos. I think it's a great time to be in the crypto world now. Great buying opportunity, especially in Bitcoin, Ethereum. Amazing opportunity now. So I'm super psyched. I'm one of the few that actually kind of likes when the market drops. First of all, I think the upswing is going to be bigger next time, and it's just great buying opportunity. So I feel like things are on sale now. I just wish I had more money lying around, but I just think it's a great opportunity. So, thank you guys for watching. Thanks for all the amazing questions. Really appreciate it. And again, it's every week, 12 noon Eastern Standard, Wednesdays. I know it's not the best time. I just don't know a better time. I've tried afternoons, nights. It's like everyone's busy with a million things. If you got kids or other hobbies like work, golf, whatever, there's always a million other things to do. But I got you guys. I'm trying to help. I'll work with you. I will push the envelope as best I can. I want to hear from you, so we can do this together. And I'll advocate if I have to. Our organization is advocating with the IRS, trying to get more guidance on this based off McNulty, and make sure they understand the distinction between cryptos and metals, especially from a safety and security standpoint. So thank you. And Mark made a good point. Nodes could trigger UBIT. It's possible. It all depends on the level of activity, but good point, Mark. I appreciate it. That's it. Have a great rest of your day. Great week, and I'll see everyone again next week. Take care.